is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. It's Tuesday, September 5th, and the Twitterverse is still talking about Bitcoin ETF. So we're going to start there just very briefly. Last week, obviously, there was a landmark ruling where a federal court rejected the case of the SEC in a civil suit that Grayscale brought against the regulator for basically preventing them from converting their trust into an ETF. We talked about that last week, so if you want a full deep dive on the current state of affairs, I would encourage you to check out that episode. In the aftermath, we saw the discount to NAV for Grayscale's Bitcoin trust and also Grayscale's Ethereum trust narrow somewhat in the Bitcoin instance more dramatically than with Ethereum, and got as low as 18 or 19% and is now widened a little bit to about 20. So it's basically more or less unchanged over that period of time. The 20% discount is still suggesting that it could be some time before an approval is granted, though I think at this point, a lot of commentators are saying it's really a matter of when and not if. Bloomberg increased the odds of an ETF approval this year to 75% and 95% by the end of next year. Not sure what the methodology is, but they've been following this fairly closely. And then we also saw JP Morgan's analyst who tracks this basically predicting an SEC-approved spot Bitcoin ETF in the aftermath of this, saying essentially that the SEC will be quote, forced to approve a pending spot Bitcoin exchange traded fund. So that's interesting to say the least. And obviously that's what people are talking about. Weirdly, the price action in the immediate aftermath, we saw Bitcoin go up and then it retraced the entire gains and now is actually trading below it was prior to the announcement from that court case, around 25,800 from say $26,000. So whatever the real odds of this happening, the market is not pricing it in at least in my opinion. As a Canadian who's, and I think we talked about this a bit in the last episode, but like as a Canadian who's seen what happened in the Canadian ETFs market, when our ETF launched, was the biggest ETF listing in Canadian history, and I would expect the one in the US to be an absolute like barn burner. And so I think the flows are going to be hugely towards the buy side here, not to the sell side, as some people have expected, because of redemptions and arbitrageurs and all that kind of stuff. So anyway, nothing new at this point. Andrew, I don't know if you have anything to add before we jump into some real news here.
Yeah, I think the market got way ahead of itself when Grayscale sort of won that court decision. And then the SEC sort of brought us back to earth when they, postponed all 6 applications for Bitcoin ETFs on Friday. I think it was Friday, which, included like Valkyrie, Wisdom Tree, Vandect, Fidelity, pretty much every major, TradFi company. Their Bitcoin ETF application got delayed. It's the key date everyone's looking or sort of circling is they postponed the decision by 45 days. So mid-October is going to be really interesting. We'll see if that's the day, or if this is going to be more of like a grinding process, and we'll take more court cases and things like that. So, I think that was market got ahead of itself. SEC brought us back to earth. Mid-October is probably the next time everyone gets really excited. I suspect that the can will get kicked down the road again. But we'll see.
Yeah, we'll see. I mean, that seems to be how we end every conversation on this, because for 7 years, there's been no resolution on this issue. I mean, people forget that the first Bitcoin ETF filing, I think, was 2013 by Cameron and Tyler Winklevoss. And here we are a decade later and still in the same spot. So the we'll see is maybe not satisfying, but I think appropriate in the context. Okay, moving on to some real stuff. So one of the themes that we've talked about a lot on the show is how business thinks about the Web3 toolkit, about crypto assets, about smart contracts and the like. And my thesis has always been that in the last year, despite the failures of some high-profile CeFi companies, that a lot of enterprise adoption has kind of continued unabated, and there's a couple of reasons for that. One, I think that the move of Ethereum from proof of work to proof of stake removed any sort of ESG concerns that enterprises might have, and now Ethereum, along with projects like Cosmos and Solana, all use a system which doesn't burn any more energy than your average data center. So that's, I think, an important step. We've also seen the rise of NFTs and stablecoins finding product market fit, and I think with NFTs in particular, kind of lowering the barrier for brands and companies to kind of tinker and experiment. And I also think, frankly, that the fact that the market is a little cooler has led to some increased, comfort in working behind the scenes without being in like the harsh glare of like promotional spotlight and everything when everyone gets super excited about one company saying something or the other. And so we've seen the likes of PayPal, MasterCard, and others really making like serious investments in this space. I think that's been encouraging. We saw a recent announcement about Visa that I know you want to talk about, Andrew, because I think it says something about a network that we've talked about a lot on the show. So why don't you take it away?
Yeah, so Visa essentially announced earlier this morning they're going to be using Solana at scale for settling their stablecoin transactions. And it's essentially for all vendors for debit and credit card payments. This is for, exactly, using USDC stablecoin for, it's essentially instead of receiving fiat currencies as an option. And this is essentially like a pilot program from what I understand. But what's really interesting, it's interesting that Visa's getting into crypto in the first place. Though this is not their first foray. Like they've been kind of, trying things here and there over the last couple of years. What's really interesting is that they're leveraging Solana, because Solana has been sort of, at least sentiment-wise, has been probably the most beat down of all the major L1s, mostly due to kind of the stink from their association with FTX and Alameda. And so, as FTX blew up, that everyone kind of associated that as being very, very bearish for Solana. Alameda, I believe, owns something like 5 or 10% of all Sol supply as well. And so like part of this was just kind of speculation that as the bankruptcy proceedings, take place, the estate would essentially have to liquidate huge amounts of Sol on the market to make their creditors whole. And so that's also been a huge sort of like weight on the ecosystem. What's interesting though is I actually follow a number of sort of key developers and influencers within the Solana ecosystem.
Yeah.
And I'd actually say they've been very optimistic. It's kind of got like an underdog angle to it, which has been really cool to see. It's been very different than kind of other L1s that have been under fire, where the ecosystem kind of just dies. In Solana, I would say the remaining sort of devs and projects are very, very combative about sort of talking about how Solana is not dead. You know what I mean? Kind of talking up Solana. It's getting a little bit of like a I wouldn't say a cult vibe, but it's a very, very strong community. And I think actually Vitalik even mentioned this maybe like 6 to 12 months ago, talking about how like there's like a core developer community in Solana that's incredibly committed to their design choices. And so I guess moral of the story is Solana is not dead, clearly. And they've obviously always prioritized scalability and speed over everything. Some people say over decentralization. And I mean, it's clearly paying off dividends here with Visa choosing Solana as the sort of go-to chain for settling USDC transactions. This is also a lot different than Tether, which for the most part uses Tron as its sort of settlement chain. So yeah, I mean, I just kind of, I think like this just sort of like further, I guess I take sort of two implications from this. One is this just kind of further reinforces this view that the Solana ecosystem is much greater than just FTX and Alameda. There's a very committed, unique, and I would say differentiated developer ecosystem and clearly as well institutional use case for the chain. And then the second thing is that we're clearly in a bear market because this is massive news, and Solana is only up. The Sol token's only up 2%, which doesn't. I mean, maybe the market sees this not as big news. I think this is just incredible inefficiency and just despondency from the market.
Yeah. Well, I mean, like, why should Solana be higher? Like, let's talk that through. So, if Visa's using USDC, let's say Visa, like PayPal, is getting deeper into stable coins, they want to settle on a chain. That means what? Demand for Sol? Like, how does it impact? Just talk through, like, what's the actual impact on the valuation, other than like vibes. There's like the vibe component, which is this is great for Solana, but like, should it lead to a higher price? All things.
Yeah. Yeah, I think there's two things. So there is obviously the sort of hype component, which in a bull market is probably 95% of why things move. I do think fundamentally, though, there's sort of two key, huge like bullish catalysts from this. So the first is it makes other institutions comfortable with choosing Solana as their sort of settlement layer. So I think that just like sort of portends future institutional adoption. I think Polygon did this really well. They got a couple institutions to use Polygon. Eventually, it seemed like every institution, when they were launching their NFTs, was using Polygon because it was kind of seen as like the green and scalable choice. So that's one thing. And then the second is, I mean, it's kind of interesting because Solana's entire sort of use case is having incredibly low transaction fees. Which means that kind of reduces the value capture for the Sol token itself. You know what I mean? If there's low transaction fees, then that's low transaction fee revenue for validators. That therefore sort of essentially means the token is less valuable to stake, notwithstanding Sol inflation, which is over the long term not sustainable. Yeah. So I guess this kind of just says that like the more like at the end of the day, though, there is some. I think with Sol, it's a little bit like pushing on a string, just because transaction fees are so low that you need literally billions of transactions to make a dent in terms of transaction fee revenue, or at least many.
Which sounds like a good thing if you're Visa or any other user for that matter. That it's not just because it doesn't become a victim of its own success, right? At least that's the of Ethereum.
Yeah, that's the thing with Solana that is actually really interesting. Is it is in a way it's much more optimized for the long term network effects than something like Ethereum or one of these other chains because it's so cheap. It's so cheap that it encourages adoption, and like less focus on value capture. Though at the same time, it also hurts you because if you don't have value capture, then your token prices all things equal should be lower, which therefore means like a lower security budget securing the chain. So like it's kind of interesting. Both things play into a role. I think Solana's clearly defined a lane, which is we want mass adoption of use cases that require extremely low transaction fees and require huge amounts of transactions. But yeah, I mean, it is interesting because it's easy with Ethereum to sort of model out how many I mean, it's still difficult, but it's easier to model out how many transactions will feed into how much revenue. It's a lot harder with Sol, just because transaction fees are so low right now. So I guess what I'm trying to say is it's still, in a way, I would just say it's harder to fundamentally value Sol. So maybe like the partnerships and the more like adoption and network effects matter more, I guess. Whereas with Ethereum, you can kind of like model out how things will increase yield for staking ETH.
Yeah, interesting. Well, putting that aside, I mean, the big significance is, this thing that was in the penalty box because of FTX is getting validation from big companies who see in the network usefulness for their business. And isn't that the most important thing? Speaking of usefulness, we had an announcement from a prior DeFi Decoded guest, which I think bears repeating for people who didn't see. Circle announced that Noble XYZ has been chosen as the partner to basically roll out USDC on the Cosmos network. So you may recall we've had conversations with Ethan and Sunny and Yelena, who's the CEO of Noble, about the Cosmos ecosystem, and we talked a lot about it on this podcast. So nice to see that announcement. I think they could sorely use it. UST, of course, the doomed project from Do Kwon, was the number one trading pair on Osmosis and other exchanges for a long period of time. And when that went under, they basically had no liquidity, US dollar liquidity. So having USDC on the network is going to, I think, materially improve the quality of the experience of trading assets on Cosmos, and I think it's going to give a nice jolt to that ecosystem. So I thought that was interesting to see as well.
Yeah, exactly. I mean, it's great to see all these different projects. We've had the founders on the podcast. We've had Anatoly from Solana and Yelena on from Noble. So making moves. Lots of
making moves. Good things happen when you come on DeFi Decoded, apparently.
Yeah, exactly.
Yeah.
So what types of guests are we looking for in the next couple of weeks? Any big surprises?
Well, we're going to have a really good guest on next week. We had some good feedback from our Canadian listeners and actually listeners in general about the Kraken CEO who came on a couple of weeks ago. And so we're going to continue on along this theme of, if the U.S. right now is currently in flux, I would say, from a regulatory perspective, there's a lot of uncertainty about the direction, how things are headed. Can other countries use that as an opportunity to become leaders and to seize the mantle here? And so we're going to keep on this Canadian theme, talk about the regulatory environment here in Canada, some of the big players. So we got one of those. And then we're also going to have a really great gaming guest, someone who we've had on the show before, and get an update on how things are going there. So the Web3 gaming theme is something we've been, keen on for some time. Basically, the idea is like, if you're going to spend a lot of time online earning assets or spending a lot of money buying them, you might as well own them and have, autonomy over those assets and be able to do with them what you'd like, sell them, trade them, etc. So that seems like a kind of clear product market fit in an economy where people are already spending like tens of billions of dollars on virtual assets that they may buy but not actually own. So to me, that's a really cool theme. We're going to revisit that, see how we're headed. And there'll be lots of other stuff too. I mean, we book guests out on like kind of a rolling basis, right? So, listeners, if there's anyone you'd like to hear from on the show, we can reach out to just about anybody. So let us know, and we will do our best. So that's it for this week, kind of a slow-ish news week, but we'll be back with a guest next week. So please tune in. Until then, take care and see you next time.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.